USDT has hit a new all-time high, Metaplanet is on a Bitcoin buying spree again, whales are all betting on Ethereum, and volatility is catching up with gold. The bull market engine might be shifting to Asia. Google, Coinbase, and Stripe are all vying to become the central bank of AI payments, while Hong Kong has just played its trump card with the RMB stablecoin. Will the EU's MICA end up being a spectacular flop? September 22nd, Monday, this is BTV Chinese channel's Where is the Blockchain? I'm Michael. Let's first take a look at the most important data headlines from the past 24 hours in the crypto world. Yesterday, CoinGecko released a big number. USDT's market cap surged to $172 billion, with a 24-hour trading volume of $54 billion and $16 million. The total market cap of all stablecoins across the network reached $297 billion. Today, Japan's Metaplanet increased its holdings by another 5,419 bitcoins, bringing its total holdings to 25,555 bitcoins. What's even more exciting is that the engine of the entire market is shifting eastward. According to data from Chainalysis, in 2025, the trading volume in the Asia-Pacific region surged by 69% year-on-year, reaching $2.36 trillion, leaving Europe and the US far behind. CryptoQuant's Korea Premium Index has been consistently in the red for years. What does that indicate? Retail investors are paying higher prices than anywhere else in the world, even more than institutions. So at least in Korea, retail enthusiasm is at its peak. In contrast, in the US, Bitcoin reserves on exchanges have been shrinking, with offshore and Asia-Pacific platforms continuously grabbing market share. Both the money and the hype are heading east. So the leader of the next bull market is very likely not going to be Wall Street, but rather Seoul, Singapore, and the broader Asia-Pacific region. You could say there's a real chance we'll see a trend where the East overtakes the West. Let's take another look. Yesterday, Binance's Changpeng Zhao posted a complaint on X. He said that during the bear market, his followers grew from 9 million to 10 million, but now that the bull market has arrived, his follower count has actually stalled. He joked about himself, wondering if maybe he's just not KOL enough. And he even joked that maybe the bull market hasn't really started yet. At the same time, the 30-day MVRV difference, which specifically tracks long-term and short-term players, has also flashed a signal. Bitcoin is currently in a potential breakout phase. What does that mean? Let's look back. In the bull markets of 2013, 2017, and 2021, before the wild surge to the top, there was always this kind of accumulation phase. And now it's the same. The difference has been climbing since the end of 2022, but it still hasn't reached historical highs. In other words, the momentum hasn't been exhausted yet. If it keeps pushing upward, it's very likely to officially enter the breakout phase, which is the most intense stage of the rally. In other words, this could be the last window to get on board before the bull market peaks. If the difference really breaks through the critical point, the market could ignite at any moment. HyperInsight has recently been keeping an eye on a major player with the address 0x35F. This address has just opened a new long position on Ethereum, directly adding 2,900 ETH to their holdings, with a market value of about $12.48 million US. The liquidation price is set at $2,289. As for Bitcoin, a large portion of its long position has already been cut. Now the main position is basically in Ethereum, with a total position of about $16.86 million US. At the same time, the input-output ratio for Bitcoin has also started to rise. At the beginning of the year, it was less than 1, but now it has soared to above 1.25. What does this mean? If this ratio is greater than 1, it indicates that funds are flowing outwards, such as through withdrawals or rebalancing positions. If it is less than 1, it means funds are concentrating into Bitcoin, which is more common during quiet market periods or before large transfers. So now that this ratio has surged, at the very least it shows that on-chain activity is picking up and the distribution of tokens is becoming more dispersed. According to historical experience, this kind of situation is often accompanied by increased liquidity and rising prices. If it can consistently stay above 1.25, then the medium-term bullish outlook for Bitcoin is almost certain. Plus, with the price approaching its all-time high, market sentiment could be ignited at any moment. Alright, please like and turn on the notification bell. We'll help you sort through the Web3 news that's closest to making money. Today is Monday, and at 8 a.m., we released the weekly report exclusively for our Gold members. Actually, a week ago, we predicted that this round of decline should have been expected. It's a case of when all the good news is out, it becomes bad news. Because compared to the epic positive news of the spot ETF approval on January 10, 2024, the current Fed rate cuts have already been priced in during the previous rally. So now it's a situation where all the good news is out, and it turns into bad news. So when is the best entry point for you? Please refer to our members-only weekly report. For today's headline, let's take another look at Bitcoin. Bitcoin's current volatility is already approaching historical lows, basically fluctuating within the $111,000 to $118,000 range, which is the lowest volatility point in 2 years. Even the funding rate is currently in a contraction window. Although there's a bit less of that roller coaster excitement, you have to believe that the Fed's rate cuts have only just begun. Plus, with spot ETFs seeing a net inflow of $50 billion this year, the capital base behind Bitcoin is now larger and more stable than ever before. In other words, Bitcoin is shifting from being a short-term speculative asset to becoming a safe haven for capital. Die-hard bull Michael Saylor put it bluntly, this isn't boring, it's called maturity.
Bitcoin's volatility declined from over 60% in 2023. By Q3 2025, it's expected to drop to between 32.9% and 35%, nearing gold and S&P 500 levels. Gold's volatility has remained stable for years, typically 15% to 25%. The S&P 500's volatility ranges from 18% to 22%, typical of a mature market.
The 10 years from 2025 to 2035 will see a wide variety of business models, many different products created, numerous companies launched, and a lot of money made. There will also be plenty of mistakes and many fortunes built. This is the chaos of the marketplace.
The reason behind this is the deep involvement of institutional investors. Spot Bitcoin ETFs now manage over $219 billion, and public companies hold nearly $11.8 billion. Their buy and hold strategies reduce the available supply in the market, making prices more stable. Even major events like a Federal Reserve rate cut can hardly shake Bitcoin's price movement anymore.
Bitcoin is actually in a pretty conflicted and paradoxically cute state right now. On one hand, its computing power and structure are supposed to be decentralized, but now 80% of the liquidity is in the hands of large institutions, and the trading volume is decreasing every day. In the short term, this makes the price very stable, right? As steady as an old dog. However, the risks are still there. If liquidity really gets stuck and someone suddenly dumps their holdings, the volatility could become even scarier. So when all the tokens are concentrated in the hands of a few giants, to put it bluntly, pricing power gradually becomes an oligopoly. And what's even more critical, global regulators are watching these ETFs and listed companies under a magnifying glass. Even the slightest disturbance could trigger the market, especially the highly emotional retail investor market. But if we look at it from another perspective, this might actually be a sign that Bitcoin has gone mainstream. It's no longer just a speculative toy, it's being treated as a digital asset. Simply put, we're only at the starting line now, and the story of Bitcoin ahead should be even more exciting. If, when it comes to AI, you're still only focusing on its applications and how it can reduce your workload, let me tell you, you're in danger. You might get left behind. Because Google has teamed up with more than 60 organizations to create an intelligent agent payment protocol called AP2. What is their goal? They want different AI agents to be able to connect automatically and settle transactions in real time. Please note, settlement is the key word here. Stripe and OpenAI have also formed a team and launched a payment-grade Layer 1 public blockchain called Tempo, which claims to provide the underlying network for AI transactions. What does this mean? Let's imagine. In the future, AI won't just help you order takeout or handle documents, it will also help you pay, buy resources, and negotiate partnerships. Simply put, the foundation for an AI version of Alipay plus banks plus Swift is quietly being built. Whoever seizes the opportunity to establish this infrastructure first could gain the power to shape the next generation of the agent economy. So this race to stake out territory has already begun.
Google's AP2 focuses on building a universal credit semantic layer, not to overthrow Visa or MasterCard, but to be layered on top of them. Coinbase's X402, on the other hand, sticks to a native approach, aiming to provide AI with a purely on-chain economic system. Stripe's logic is even more straightforward. Neither traditional payment networks nor existing public blockchains can meet the future AI economy's demands for ultimate performance, predictable low costs, and strict compliance. Therefore, it's necessary to build a versatile foundational layer like Tempo themselves.
The reason this news is so important is that you really have to imagine, in the future, AI will not only understand you, know your logic, and know your spending habits, but it will also be able to spend money for you, manage your finances, place orders, and handle settlements on your behalf. So just think about it. At that time, the market will see a whole new group of buyers and sellers. You won't be able to see who's placing orders, but every AI node will come with its own wallet. By that time, financial infrastructure may be rewritten, and the bottom line of sovereign currencies and regulation will also face direct challenges. If, in the future, hundreds of millions of AIs are able to freely trade and make investment and trading decisions based on your subjective logic, then the logic of global capital flows will also be rewritten. What do you all think?
South Korea accelerates R&D while Hong Kong leads in issuing licenses. Who will dominate Asia's stablecoin race?
The EU wants to cut off Russia's crypto funding chain, yet it also wants to create a backdoor in crypto. Anyone who has done foreign trade knows that using SWIFT is like crossing a single plank bridge. Transfers made during the day might still be on the way at night, and the fees are heavily deducted. But now that stablecoins have burst onto the scene, not only do they save money, but funds can also arrive within minutes. It's practically express delivery for cross-border transactions. As for South Korea, they're actively researching how to implement a Korean won stablecoin. Mainland China's regulatory policies are very strict, but Hong Kong has taken a different approach. In 2024, it promoted a licensing management model, and now it has launched a compliant offshore stablecoin pegged to the RMB for individuals. You could say the RMB now has an on-chain counterpart, taking another step toward internationalization.
We actually had a number of different trials, whether it's talking about tokenized green bonds, but stablecoins are a fundamental component in building up this entire ecosystem.
According to Reuters, fintech company UNCX launched the offshore RMB stablecoin XCNH in Hong Kong during the Belt and Road Summit. The coin has already received in-principle approval from Kazakhstan's AFSA, is issued on the Conflux blockchain, is fully backed one-to-one by CNH, and can be freely exchanged. Currently, the AXCNH USDT and AXCNH KZT trading pairs are open to professional investors on the ATAX exchange. UNCX is currently testing cross-border payments with companies such as Zoomlion and plans to expand into the RWA, settlement, and DeFi sectors in the future.
There's no doubt that the XCHN launched in Hong Kong is truly unconventional and sensational. It enables RMB to be put on-chain with 24/7 settlement. Just think about it. If it's more convenient for ordinary people to use than banks, who would still choose banks? If international settlements become this fast, who would still choose the traditional payment systems? However, how this product will navigate regulatory scenarios and how it will balance licensing and backstop mechanisms, that's what will be interesting to watch in the future. How long this product can last will depend on the tug-of-war between the market and regulators, and which side comes out on top. The EU was the first region to introduce a cryptocurrency regulatory framework with the MiCA Act, but now the biggest challenge facing the EU is how to bridge the differences in interests or actions among its member states regarding the MiCA Act. On September 19th, the EU passed the draft of its 19th round of sanctions against Russia, and for the first time, cryptocurrency platforms were included in the sanctions list. This means that not only are physical transactions with Russia prohibited, but digital asset transfers are also banned. Moreover, if you transfer digital assets to pay Russia, your account will be directly banned and frozen. So the goal is clearly to cut off Russia's financial lifeline. So it's clear that the EU is paying more and more attention to cryptocurrencies. However, just as they were busy tightening regulations, a major incident suddenly erupted and caused a huge stir.
We're stepping up our crackdown on circumvention. As evasion tactics grow more and more sophisticated, our sanctions will adapt to stay ahead. Therefore, for the first time, our restrictive measures will target crypto platforms.
As European lawmakers prepare to make decisions on the Chat Control Act and the regulation on preventing and combating child sexual abuse, privacy experts warn that this could undermine public trust in digital communications, and users may turn to Web3 platforms. From both legal and technical perspectives, this could set a dangerous precedent. The main point of contention is that the bill requires platforms to scan private messages before encrypting and transmitting them. Opponents argue that this is equivalent to leaving a backdoor in encryption systems, which runs counter to the EU's commitment to privacy protection.
So ultimately, it comes down to the same old issue, regulation, or rather, where are your tools? You can issue directives banning this or that, but in the digital asset world, there are 100 ways to circumvent regulation. The biggest issue is whether the government actually has the tools to enforce effective regulation. So Hans Lampel, the CEO of Dial, poured cold water on the idea, saying, "Stop dreaming, it's simply not possible to guarantee this, since data leaks from government systems alone account for over 10% of all incidents." If this really goes forward, Europe's digital market could end up split in two. There's no doubt that the EU wants to position itself as a global rule maker for privacy. If this bill passes, it will give the EU more say on this path. But the key vote lies in Germany's hands. Germany's vote is extremely important. Although 15 countries currently support the bill, their combined population still doesn't exceed 65%. If Germany gives the green light, the bill will likely pass. But if Germany abstains, the EU's plan might just fall through. All right, that's the news update.
With a grand gesture, Trump handpicked 3 patriotic heavyweights to take over TikTok in the US: Lachlan Murdoch, the Fox heir, Larry Ellison, the Oracle legend, and Michael Dell, the head of Dell Technologies. This lineup is truly an all-star team of the American dream. Elon Musk posted a photo with President Trump on X, adding a cryptic caption, "For Charlie." Footage captured by the media also confirmed that the two exchanged a few words and shook hands at Charlie Kirk's memorial event. Netizens immediately started speculating, are they about to launch a duo act? Zhao Changpeng's newly launched Giga Academy raised over $1 million in just 9 hours. It's not about someone throwing money around, rather, GigaCoin's trading volume comes with a built-in 5% fee mechanism. People are speculating and doing charity at the same time. It's basically the crypto world's version of shopping for a good cause. Crypto.com CEO Chris directly addressed the outside doubt, saying, "Stop spreading rumors. The security incident is fake. Back in 2023, a phishing attack by hackers was extinguished within hours. Not a single cent of customers' money was lost, and all the necessary reports were filed long ago." It seems the cryptocurrency market is feeling a bit down today. The Fear and Greed Index has dropped straight to 44, down 6 points from yesterday, firmly sitting in the fear zone, sipping herbal tea. The average for the past week was 50, and the monthly average was 49, which shows that market sentiment has been quite volatile lately, like riding a mini roller coaster.
All right, here's a bit of toxic advice. You can doubt a petty person's character, but never doubt their judgment. Because what petty people are best at is spotting the shining points in a crowd before anyone else, and then doing everything they can to snuff them out. Why is that? It's simple, because they'll never shine themselves, and deep down they're both bitter and insecure. So the only way they can pretend the whole world is as dark as they are is by snuffing out other people's light. So don't forget, the greatest pain for petty people isn't that they lack light themselves, but that they can't stand to see others shine. The more eager they are to throw mud at you, the more it means you're standing in a place that's shining. If you get what I'm saying, give this a like. That's all for today's program. Here we've listed the benefits of our membership. We hope you'll consider joining to support us in making this channel even more professional. We also hope to lead everyone to gradually become wealthier together in this bull market so that we can accumulate more and more Bitcoin and add another zero to our assets. See you tomorrow. Bye.